I'm with Phillip Cummins, Managing Director, StepStone Group. Phil, welcome.
Thank you very much.
It's a great pleasure to have you here, and thanks for participating in the Inside Networks Investment Leaders Forum, Byron Bay.
Yeah, no, it's been a great event so far.
Phil, StepStone seeks to serve as a value-added life cycle partner to venture managers and entrepreneurs. What does that approach look like in practice?
Good question. I think the way we think about being a life cycle partner is, we are an investor in funds, so we back some of the elite venture capital firms globally in their primary venture funds. We're also a very active direct investor. So how our philosophy really is, we have deep relationships with very, very good investors who are great at starting these companies. We get to watch these portfolios grow over time, and then we look for opportunities to be a direct investor. So we're providing direct investment capital. We also help a lot of these companies along the way. We sort of see ourselves as a value-added investor in terms of helping these companies grow over time, customer introductions, talent hires, etc. So being kind of both kind of a fund investor and a direct investor, and then sort of directly helping these companies grow is sort of a really part of what we've done. And we've sort of been doing this for a long time, about 25 years, is so some of these relationships do go back.
So it's adding human capital as well as financial capital.
Yeah, so what's interesting, like when you look at the venture capital world and the private equity world, you have kind of traditionally two parties. You have the GP and an LP, so general partner and what you call a limited partner. And so really back at the beginning, we, as being an investor in these funds, we're sort of playing the role of limited partner. We sort of took the mindset that we don't want to be a limited partner, we want to be a really active partner. So really it is about being a partner and a provider of capital to these GPs, but then just also being a provider of these capital to these companies, and then helping these companies making connections. A lot of in the private market's about making connections. It's about making connections to other companies. It's connecting customers to revenue. And in a world where private companies are just staying private longer, I think that role is really important. So, we can participate in a long period of these companies' growth versus what they were doing 20 years ago.
Mm-hmm. How does the team leverage global expertise to identify and support and nurture those really high potential investments?
So we have a global team. I think we think about the world in sort of two ways as well. In that we think about relationships, and relationships in private markets are hugely important, and then data in a private market. So in public markets, information is theoretically equally available to all participants. In the private markets, it's not. So, we have a team that's located basically on we've got team members on all the continents around the world, also within various cities in those continents. So it is about sort of being very kind of one-on-one with a lot of these managers, understanding, the way that they're thinking, understanding kind of which of the companies that they're most excited by, thinking about ways that we can help those companies, we can get leverage into those companies. We have about 125 people in our team, probably the largest venture focused team. And that's kind of like what we do every day in terms of private markets. We're just very much focused just on venture. And again, I think you need to do this thing to be sort of in this market for a long time, because those relationships do take quite a bit of time to develop.
Your venture capital and growth equity platform integrates primary fund investments, direct co-investments, and also secondary transactions.
Yep.
How does that multifaceted strategy provide a competitive advantage for StepStone in sourcing and managing investments?
So within venture, more so than any other asset class, the dispersion of returns is wider than, we're talking, a couple of hundred, numbers of hundreds of basis points difference. And if you look at the returns in venture, it's sort of what we describe as power law returns. So in effect, 90% of the returns for the whole asset class is derived by about 10% of the companies. So what are we really focused on? We're trying to focus on what are the top 100 or so companies that are going to generate the return. So that's how, in order to get the returns that we want and we need to justify our existence, we need to be in those companies. And so what it comes down to is that, fund investing, direct investing, and secondary investing is very synergistic. It's what we call it our flywheel effect. And so we're really trying to endeavour to have capital within the very best GPs who over time have shown the ability to identify and grow the best performing companies. So we're searching for what are those companies coming out of those portfolios. We're then looking for opportunities to invest primary direct capital to help those companies on their growth journey. Companies are raising capital 5, 6, 7 times through their life. So we're that's our universe of direct investments. And then our secondary capital kind of sort of wraps around that and says, look, are there opportunities to go into the secondary market and increase and build our exposure to our top pick companies? And we can do that by buying direct shares, secondary shares off existing investors or founders that are earlier in the companies. We can work with the GPs to do fund restructurings, or we can actually just buy LP interests off other LPs where we can get concentration into those top companies. So ultimately what it comes down to is what are those 100 or so companies who are going to be, go from zero in revenue to hundreds of millions of dollars or, into ultimately, tens of billions of dollars of market cap. How do we identify them? And then how do we find ways to get exposure? And we sort of use all three of those tools. And each one of those kind of helps us do the next bit, right? Being a good fund investor helps us identify the best direct investor. Being a direct investor helps us be a better fund investor. So it is that sort of flywheel effect.
Given that the venture capital space is a really dynamic area, how does proprietary data contribute to better informed decision making for you and better risk management in the whole investment process?
That's one of the aspects we love about private markets, but also the venture market in particular, is that information is really tightly held. And so being an insider in the industry, so being a very active fund investor and sitting on LPAC committees, being a director investor in these companies, gives us the information about how those companies are performing and therefore which ones are the best ones that we want to. And the reality is that if you're outside that sphere, you don't get access to that information. So, it's in effect, being an insider is the only way in which you can truly understand which are the companies that are performing the best. And for us, we're not just a sole GP or a sole venture fund that's making their investments. Because we're a fund investor, we're actually invested across multiple GPs. So we're actually able to see, companies that are also competing against each other. So which companies within a particular technology domain is outperforming the next, its next competitor, and which ones are sort of disrupting the other companies. So that information is hugely, and we do it from, reports. We have it from one-on-one conversations, from LPAC meetings, from annual meetings, conversations with companies where we sort of scrape all that data to help us make that decision. So part of it is, and some of it is also just through relationships. So it's sort of we see it as the way in which we try to create value and alpha and effect is through relationships and data. So we're able to leverage those relationships to understand which companies people are leaning into, they're leaning away from, the actual data about those companies. We get to see these companies too, for a while as they grow. And so having that data over time allows us to take the time to figure out which are the ones we want to ultimately target, and we can get to know those companies. So when an opportunity comes to us, we're already sort of prepared.
Yep. What role does ESG play in your process, and how more broadly should advisors think about this opportunity?
So I think with venture, it's a tricky question. I think we definitely have very robust ESG processes in terms of evaluating companies. I think part of where a lot of the companies that we're involved with are technology and software companies. So in terms of a lot of them are actually trying to address issues around carbon or energy in particular. Governance is an area where it's very different to public markets, right? Governance for venture can be a bit looser or a bit more hard to get your head around with voting classes and preferred securities. But I think overall, venture itself, is a positive for investors that are looking for ESG positive investments. I think what's happening in technology generally is actually helping to solve some of these big problems that we have, whether they be social problems, bringing people financial equity, whether it be around climate and energy transformation. I think there's a lot of positive stories and really is a bright spot.
Phil Cummins, Managing Director of the StepStone Group. It's a pleasure to have you at our Investment Leaders Forum, and thanks for your time.
Thank you very much.